Hey, what's up everyone? This is Silver Slayer. Thank you for tuning into this video. I have an interesting and entertaining article to share with you guys today. It is from Seeking Alpha, titled Silver and Platinum Loving the Laggards. We're talking about a precious metal that we don't talk about too much on this channel, and that is platinum. It compares and contrasts some very good points, and I think you guys will enjoy it. So before we start, make sure to smash that like button. Make sure you subscribe if you're new, because I do post daily videos. This is the third video today, so yes, I've been busy trying to make good content for you guys to enjoy. Go check out my other two videos if you missed those as well. So, gold broke out on the upside on Monday, which is today, slicing through old swing highs of $1,565 an ounce, but silver and platinum are lagging. Now, before we go on, a really good thing to take point on with this sentence is that silver is gold's little brother. So silver will follow along a little bit after gold does. Now, it also goes on to say, which what I was about to say anyways, is silver is more volatile than gold. It tends to perform better in bull markets and worse in bear markets, which is a very good point. There's a lot of opportunity in silver for these reasons. You can buy it lower and you can sell it higher than gold. Platinum was trading over $1,200 more per ounce than gold before the switch. Now it's trading at a discount of $605. And I like the word discount because it really does give you guys the perspective that it's just cheap for right now. And it's going to go back up. But anyways, let's keep on going. Gold broke out to the upside Monday, slicing through the old swing highs of $1,565 an ounce, but silver and platinum are lagging. We do not believe this will last much longer, and that's the silver part coming in. It's a little bit after, a couple weeks afterwards. Gold is rallying because of its dual role as an alternate currency and a hedge against global chaos. We examined the remarkable ability of gold to gain smartly in 2019 without any help from a weaker dollar in last Friday's blog post. So, we also speculated on what could happen when the dollar does decline. The dollar index chart in that post deserves a second look. A 2020 decline in the US dollar would pop the lid off gold. It could even have a bigger bullish effect on silver and platinum, both of which are trading at huge discounts to their yellow cousin. The chart below illustrates how much silver has lagged gold since gold has the top of the precious metals bull market in 2011. Back then, it took 32 ounces of silver to buy 1 ounce of gold. Now it takes 88 ounces of silver to buy 1 ounce of gold. So they're talking about the gold to silver ratio. So back then it was 32 to 1, but that's because silver was $50. Silver caught up to gold. It outperformed gold outstandingly, drastically. And actually in 1980, silver was $50 as well. But we're talking about right now the ratio is 88 to 1. So silver has a lot of catching up to do. This doesn't mean that gold's going to depreciate, because gold's already at around a natural price. This means that silver's going to appreciate, and so could platinum, something that I rarely talk about, and that is a lot of times overlooked, so I'm glad this article does bring some good points. Silver is more volatile than gold. It tends to perform better in bull markets and worse in bear markets. Nearly every precious metal bull market has been accompanied by a low gold-silver ratio as investors. Priced out of soaring gold prices turn to silver, but not this one, at least not yet. Has the introduction of cheap gold-backed ETFs like GLD and its knockoffs reduced the need for silver as a substitute? Maybe. Gold is essentially a financial metal. It's more than anti-dollar. It is more than anti-dollar. It's an anti-currency. Central banks have been trying to weaken global currencies, so it's not surprised to see gold rally against all currencies since 2016. Silver and platinum have big industrial components, which is true, which makes them act more like commodities much of the time, trying them closely to the dollar. Both did well in 2019 because gold did well, but the strong dollar has held them back for a long time. They both have a lot of catching up to do. A weaker dollar in 2020 could be the catalyst for big moves in silver and platinum. Stay long silver and consider adding. Unlike gold, which has posted one new swing high after another, silver has been unable to take out its 2016 highs of $21.23 an ounce. But holding key support at $16 per is a positive sign, which is definitely true. There's a lot of stability around that $16 to $18 range. It won't fall below that, and if it does, it's short-lived. Failure to close above early September highs of $19.75 an ounce caused us to lower our near-term price target slightly to $20 and $22 per ounce, respectively. Our 18-month long-term target remains $25 per ounce. A series of higher closes above silver's 2016 high would put this target in play. Silver is oversold on a weekly basis. This makes it buy at current levels, especially for those without existing positions. So here's the upside targets. This is at $25 per ounce. And here's the support level which I was talking about. See, it has a lot of support. If it does start to go down, especially from, something like this, you see it, it's almost like a barrier right here. And this barrier will not be breached. It will not break through, which shows that it has a natural price of around that point. So RMB group trading customers who followed our suggestion to our special report, let's move on. I want to highlight the main points of this article. So platinum is even cheaper than silver relative to gold. Once known as the rich man's gold, platinum has suffered under the domination of its yellow cousin since 2008. This is when automakers switched to their manufacturing process to reduce the amount of platinum in catalytic converters and replace it with cheaper palladium and rhodium combination. Platinum was trading for over $1,200 more per ounce than gold before the switch, and now is trading at a discount of $605. This is a net loss in relation to gold of over $1,800 per ounce. Platinum has lost nearly as much via gold than combined with both metals. So how did this happen? Industrial demand for platinum dried up in an overpowered investment component. Palladium, the beneficiary of the autocatalyst shift in 2008, has soared, which is definitely true. And this shows how important it is for supply and demand, how surplus can definitely affect markets. And I think that once people start seeing how much silver is used, especially silver is used in technology, especially EVs, electric vehicles, in like 30 years tops, 40 years tops, every car is going to be an EV, an electric vehicle. And silver, being the most highly conductive metal for thermal conductivity and electricity, is highly going to be used. So they're talking about palladium and these catalytic converters, but think about the way that the digital era we're going into. It's going to be huge, especially if the supply cannot meet the demand, which was already happening. So why haven't these automakers switched back? We don't know. What we do know is the overall demand for platinum rose sharply in 2019, while supplies lagged, leading to a big deficit. But the supply deficit for palladium was even bigger, causing its price to rocket far ahead of platinum. Palladium now costs $1,032 an ounce more than platinum. It was $550 per less in 2016. Platinum could soar if and when global automakers switch back. So that's something to think about and consider. So interesting stuff. I'm gonna wrap it up there. But look, it's interesting because there's so many points that they mention in this. First, starting off with the gold to silver ratio. That's a great way. The gold to silver ratio is a great way to see what is the better buy right now, either gold or silver. And right now, silver is extremely undervalued. When the ratio was 32 to 1, gold was the better buy. Because silver's already exploded. Silver's already $50. You don't want to buy silver at $50. You want to buy silver when it's $16 and sell it when it's $50. But for some reason, most people bought it when it was $50. And that's because all the hype's around it. That's when everyone's talking about it. And it's interesting. But now we see this platinum and palladium switch where palladium was the underdog. But now palladium's the king, when platinum was once the rich man's gold. So we see things switching, and it's interesting because I'm sure a lot of people lost a lot of money, and I'm sure a lot of people made a lot of money. It really does depend on when you got into the markets and if you can capitalize or understand when the best time to buy, hold, or sell is. So anyways, the link to this article will be in the description. I hope you guys did enjoy it. Hopefully silver can stay above these support lines. I definitely think it's going to. I mean, silver has way too much fundamental use, and it's definitely scarce. It's not much more common than gold is, so I'm not really worried. But anyways, if you did miss my 2 other videos I posted today, make sure you guys go check those out. I'm going to wrap this video up here. Thanks for tuning in. This was Silver Slayer. Make sure to smash that like button. Subscribe for new because I do post daily videos. Thanks for tuning in. I'm out. Peace.